Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, you will get a chance to connect with our experts and write to us directly on the WhatsApp number that will be flashing on the top of the screen. But before that, let's have a look at what the markets are up to. So Cheryl, the carnage continues for the benchmark indices as well as the broader markets. But the good part is we are seeing some recovery from the day's lowest point.
Yes, absolutely. A substantial recovery on that front. Very good morning to you, Shrishti, and definitely rooting for the bulls, isn't it? She's wearing green. We are seeing a very smart recovery, but the advanced decline ratio, that's still tilted in the favor of the declines as we speak. The NSE and the BSE advanced decline ratio, both of them now actually is worsened if you look at the advanced decline ratio compared to the start. Because at that point in time when the markets are open, it was a neck to neck. But like we can see on the bottom of your screen as well, a sharp recovery coming in, be it the broader markets, be it Nifty Bank. That's where the carnage was extreme in yesterday's trading session. So good recovery coming for Nifty Bank from the day's lowest point. Approximately excess of 1% or so we've recovered from the day's lowest point coming for Nifty Bank. Even Nifty is seeing a very solid recovery in today's trading session. So for now, after the initial dip, we are seeing some sort of a recovery come in. And hopefully we should be able to sustain it and not go by what the advanced decline ratio is indicating for now. But let's take a look at what are which are the list of gainers and the losers in trade today. You have Tech Mahindra that's seen a very smart recovery from the day's lowest point. Tech Mahindra right now in the positive territory, seeing an uptick of as much as 2%. Axis Bank has turned positive. BPCL, Sun Pharma, Tata Motors are the other set of gainers at this point in time. While on the flip side, it is LTI Mindtree still reeling under pressure. Now 10% downtick coming in for LTI Mindtree on back of earnings. Asian Paints also reacting to earnings, so down approximately 2.8%. NTPC, HDFC Bank, IndusInd Bank are the other set of losers at this point in time. So let's take a look at the sectoral picture and what are the sectors doing at this point in time. If you look at the sectoral picture, actually all of them are in the negative territory, with the PSU Bank index losing the least amount, while on the flip side is the metal index, IT index, the energy index, all of them seeing sharp downtick in trade today. So that's the way how the markets are looking like at this point in time, trying to stabilize after seeing the initial dips, trying to see some sort of a recovery. But is this recovery here to stay, and what are the market readings right now? Let's bring on board our guests for today. We have Ashish Kapoor as well as Kunal Bothra joining us on the show. A very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on ET Now, and hopefully we are in for a better day compared to what it was yesterday. We started, at least Tuesday was not such a great one coming in for the markets. Ashish, let me come first to you. Yes, we saw what HDFC could do, or HDFC Bank could do in particular, to the Nifty Bank as well as Nifty. We know that it has the huge weightage in both of these indices. But right now, do you think it's worth venturing in either of the sectors? In HDFC Bank in particular, and also the banking space in particular?
Well, I think what looks like from the market texture is that banking would kind of underperform the broader market, at least in the near term. So if you're looking at something which is only investment, which is maybe 6 months to 1 year, or maybe shorter kind of a duration, or you want to trade in the market, then I think banking should be avoided, because certainly it is one of the weaker points now. I think more attention can be paid to the performing sectors like manufacturing, power, infra, even IT now. So those sectors would do better in the near term. However, having said that, I think HDFC Bank has been an underperformer for 4 years now. I think that is quite a change from what it was earlier for about 25 years. And I think, frankly speaking, the results are not as bad as the reaction in the stock. A lot of it is also because of huge FII holding in the stock, and I think this is one place which they can sell if they have to, move into cash. So a little bit of overreaction, and I think that is also giving an opportunity for long-term investors. So if you are a genuine long-term investor looking at a value pick, then HDFC Bank is a great opportunity. I think do buy in a staggered way, try and do an SIP, buy some amount now, and then buy at every regular intervals, either on a price decline or on every 15, 20 days or 1 month intervals. I think it's a great time to accumulate HDFC Bank over the next maybe 3 to 6 months with a clear long-term target. I mean, long-term would mean maybe 2, 3 years at least, and then you can get a very, very nice capital creation from here, and also a very safe stock, because I think the major part of the damage is certainly done. It may just take time now for this stock to start moving up, but it's clearly for any investor who's risk averse, this is a great golden opportunity to create wealth over the long run.
All right, so that's the take coming in from Ashish, and he feels that the reaction that we are seeing in the markets is a bit of an overreaction right now, and HDFC Bank, especially at this point in time, is good, is seen to be at a good levels for a long-term investment horizon. So that's the take from Ashish. But Kunal, coming to you, we are seeing the carnage continues, but the second half of yesterday was quite scary because the weakness just got worsened. So what are your analysis that as of now, how much confidence the kind of a recovery that we have seen is giving you at this point in time? And what's your take on HDFC Bank as well as some of the other sectors that are on your radar?
Good morning. Thank you so much for that. And I think it's good that yesterday, second half, I was not there because I didn't see the markets in such kind of panic. But then, I would believe that net we are, we would probably have wanting this correction for the index maybe in the last, 1 week or so. It's because of maybe a reason for HDFC Bank to correct that the markets have found that reason to go into a correction. I believe now that we should now be looking at a phase where the market should temper down the speed of the momentum on the upside. We could now be looking at 21,500 acting as a pivot for the index, and I strongly believe that there could be a possibility that we may maybe retest the 21,000 mark, and then on the upside 22,000 levels. These are the two ranges which I would probably believe that we should fluctuate for at least the next 3 to 4 weeks for the indices. So one should not be in a hurry to try and just buy because the indices have dipped some 400, 500 points from the 2 days high. But I believe that find a point when the index gets into a stable zone. I think there is a lot of open interest jump which is happening into the indices and shorting of fresh stocks which have happened. That could also put more pressure into individual stocks and could probably temper down the rallies for the indices. So net view is that the index would consolidate, but the range which was 300, 400 points is now broadened to almost 700 to 800 points.
So markets will consolidate, but particularly for HDFC Bank, Kunal, do you think right now chasing HDFC Bank would be like catching a falling knife, or do you think now it will stabilize?
See, I think it's always best to go with data because, as I was flagging off in the morning, yesterday, there was a 25% jump in the open interest for HDFC Bank. That was clear indication of fresh shorting which had happened to the stock. And I think after today's downtick, we need to see again that whether there is closure of positions. If that happens, then we could be looking at a temporary bottom in place for HDFC Bank at this 1450, 1500 levels. If not, then there could be maybe one more round of sell-off which could probably be triggering into the stock.
Alright, so that's the take coming in when it comes to the banking space and HDFC Bank in particular. But there is another sector. While people have spoken about Nifty Bank, also they've spoken the same breath about Nifty IT Index. But let's take a look at what's happening to the IT Index today. And the IT Index is in the negative territory, about a percent drop coming in, or 0.7% drop coming for Nifty IT. And one of the sole reasons, a major drag has to be LTIMindtree. 10% downtick for LTIMindtree, but in the same breath, let me ask my producer to pull up the chart for Oracle Financial. While LTIMindtree is down 10%, you have Oracle Financial that is reacting to its earning and now approximately 20% uptick. And my colleague Anisha is here to decipher all of that for us and tell us why such divergent move in the large cap and in maybe a mid cap IT company. Is that the play you think people are looking at? Or what's the other reason?
It's very company specific because LTIMindtree is more services business while Oracle is more product business. If you look at the services revenue of Oracle, that has actually gone down quite a bit. So services is what is weak. But you know what? Let me start with LTIMindtree because that's the big talking point right now. We have seen a slew of downgrades come by, and we should pull up those two columns in terms of what the brokerages were anticipating pre-earnings and what the situation is right now. Because pre the earnings, there were 19 buyers and there were 11 sell on the counter with a consensus target price of 5988. That has been brought down now. Post earnings, the number of buys have been brought down to 15. The number of sell has actually increased from 11 all the way to 16. So a lot of downgrade is what we have seen for LTIMindtree, and the consensus target price too now stands at 5,960. But what's the reason of that? The reason is that earnings were weaker than expected. Yes, there was a miss on constant currency that came in at 0.8% versus 1% expected, but it was the weak commentary that has got the stock tumbling in the trading session right now. So what was the key commentary? The commentary was that the quarter 4 is likely to be on a similar trajectory as Q3, so no recovery as such. The furloughs are expected to continue into Q4 as well, and that means there will be weakness in Q4 as well. The offshoring, utilization and client rationalization is already at peak level. So the company tried its best to squeeze out the best of the efficiencies. Still, the margin dipped this quarter. The margin actually came in at 15.4%, which was lower than our expectation. And the target that the company had of 17 to 18% EBIT margin has been pushed out a couple of quarters. So there is a delay in terms of hitting that target as well. Of course, in terms of the analyst commentary, they're not very confident about the synergies that the street was factoring into the numbers, because for now, we have neither seen the cost synergies play out, neither we have seen the revenue synergies play out. So whatever was baked into the earnings estimate is now being taken out by the analysts. So that's the story on LTIMindtree and the reason why that stock is down about 10%. But Oracle, as I was talking about, has actually reported a very strong set of numbers. And by very strong, I mean that the revenue was up a solid 26% year on year. And look at that profitability jump 70% higher on a year-on-year basis. Of course, this is seasonally a stronger quarter for products business, but even on a year-on-year basis, we have seen strong recovery there. Products business was up 29% on a year-on-year basis, even as services declined by around 2%. The company has managed to sign very strong license fee income at $49.5 million this quarter. They also signed a landmark cloud deal with the Navy Federal Credit Union of USA, and also they continue to see robust deal pipeline across the regions. And that's the reason Oracle has been doing quite well. In fact, if you pull up the last 5-day chart, you'll see that the stock is already up 30 to 40% and it's just building on to gain. So wherever there's any sign of recovery or strong earnings, it's getting a clear thumbs up from the street.
Absolutely. We in fact saw that with even Wipro and for the matter of fact Infosys as well. Any news is good news right now coming in for IT index, which was hammered out of shape at least over the last 2 years. Thank you so much, Anisha, for putting that into context, isn't it, Shrishti?
Well, yes. So very divergent moves coming in on both of these IT names. Thanks so much, Anisha, for that. But with this, viewers, let's move on and let's also hear out from the management of LTIMindtree that what's the outlook going ahead. Let's listen out from Sudhir Chaturvedi, President and Executive Board Member of LTIMindtree.
By this time, many of our clients should have firmed up their budgets, but I don't think we can see that scenario with all the clients. And wherever we have...
BFSI is our largest vertical, and it's a global vertical. I mean, it's one vertical where we have presence across the globe. What we are seeing is that the pressures on BFS spending or BFSI spending continue. So we are seeing that environment will continue for the near term. Having said that, the deal pipeline in BFS is strong. We have some new wins as well this quarter. So we will build on that for the future. But our strengths in this vertical are fundamentally strong, so we will continue to build on that. In terms of, you talked about geographies. Actually, there's the Europe the growth or the softness in growth in Europe has also come because of BFSI. Because Europe, our portfolio in Europe is heavily weighted towards BFSI. But again, having said that, some of the deals that DC spoke about in his opening remarks are also from Europe. So I think the deal momentum is strong. As we see opportunities arise and we see the environment getting better, we'll start to see a return to higher growth numbers in the future.
By this time, many of our clients should have firmed up their budgets, but I don't think we can see that scenario with all the clients. And wherever we have got the initial indication, it's only going down or at the most remaining flat. So that's the situation right now. And that's what we mean the extremely cautionary environment. Well, I think we are all hopeful that, at some point of time it has to get back to the growth, but it's very difficult to call out at this point of time with the overweighing macros and the cautionary environment.
All right, so that's the view coming in from the LTIMindtree management. But let's actually slip into a break on this edition of Buy Now Sell Now. When we come back, we'll ask both our experts on the IT index what they make of it, given the fact that we had actually Anisha explain the earnings of LTI, Mindtree and Oracle, as well as start taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and as promised before the break that we will also touch upon the IT index and see is that the space that you should bet on, given the fact that if it's not the banking space, then it is the IT space, is it? Let's ask that question to Kunal Bothra as well as Ashish Kapoor. Kunal, do you think that the IT sector will now outperform the Nifty Bank, or do you think Nifty Bank is the place to be in, given the fact that you're of the belief that we will recover from those falls that the Nifty Bank has witnessed?
I think it makes sense to have a diversified basket across both these sectors, but I strongly also believe that the large cap IT stocks do stand a very good scope to start getting into that zone of outperformance. So I'm extremely bullish on the large cap names, not and be very selective across the mid cap IT stocks, because I believe the likes of Infosys, TCS, Wipro, to a larger extent, I think these stocks are showing some exceptional chart patterns, resilience, which we've not seen for these large cap IT names over the last, I think, 3-4 years, even from the COVID rally for these stocks, but they were underperformers largely with respect to the mid cap IT. So I strongly believe large cap IT stocks should outperform, and for anyone who's looking to buy or create a basket, I think it makes a lot of sense to have a higher weightage there.
All right, so that's the take on the technical front. But Ashish, what's your analysis on the IT space right now? Because majorly all these companies have outperformed the expectation, and we have seen the stock reactions as well. But for LTI, Mindtree, a 10% downtick coming in. What's your take on the IT space and any of your top recommendations at this point?
Well, I think, broadly speaking, if you take a macro view, IT sector has underperformed, and there is no reason to believe that it will continue underperforming. I think, to give a very broad picture, the worldwide, there is a great amount of time and money being devoted to develop new technologies, be it Internet of Things or AI or whatever else, digital printing, blockchain. So all these things are a big, a focus point of all the developed economies. Now, whatever new technologies are developed anywhere, there is a lot of background work which has to come, into mostly India, because Indian strength in background, work is very well documented, very well established, and very little competition till now to that. So you can rest assured that over the next maybe 20, 30, 40 years also, the Indian IT will continue to grow. So having underperformed, I think this obviously giving an opportunity, because it is relatively not overvalued, relatively undervalued and relatively underowned. That is a broader, scenario. Now, within coming to stocks, I think mid caps have done some performance. Large caps have been laggards. So large cap is where you should focus more. And in large cap, I think there are two stocks which come to my mind, which have kind of been really underperforming, and even the IT large cap space. One is Wipro. I think Wipro is due for a big re-rating and has a very limited downside risk. So I would prefer Wipro over an Infosys or a TCS. And the second stock, which although it has done very well in the recent past, but still has a long way to go to catch up, is HCL Tech, because HCL Tech has always been valued less than the other IT majors. And I think this is set to get, partly it has got corrected, but I think there's still plenty of room left for more re-rating here. So HCL Tech and Wipro would be my two best picks in the IT space.
So that's the take coming in from both of our experts on the IT index in particular. Earlier they spoke about banking sector as well as HDFC Bank. With that, let's kickstart taking all of our stock related queries. Just a quick note to both of our experts, would be helpful if you all would keep your answers a bit short today, given the fact that we are starting the queries right now. The first one is coming in from Sushil Kumar from Trichy. Kunal, he has Happy Forgings IPO allotment at the price of 850 rupees per share. He wants to know whether he should keep investing or exit to book profits. He also has Kaushalya Logistics, but I don't think you track that one.
Yeah, questionable logistics are on track, but for Happy Forging, I think it's a good time where you may look to even accumulate further, because it seems like even with the limited history of the stock has come back into a deep oversold territory on the charts, which means we could be looking at a reasonable phase of a bounce for Happy Forging, maybe come back towards 1025 odd mark at least over the near term.
Right, moving on to the next one, and Ashish, this one is from Raghuram from Trichy, holding 10 shares of Spandana Spurti at a price of 1235 rupees. What's your view on this one?
Well, I haven't tracked this counter, so I would not like to opinion.
Kunal, anything on the charts for Spandana Spurti?
Well, I think that's a chart which has actually done extremely well, if I'm not wrong. I think it's moved from 800 levels towards 1200 mark. Last 4-5 days, of course, the stock has also gone through a correction from 1250 odd levels to 1150, 1140 mark, where a near-term bottom is in place. It's a good chart. Seems like maybe current levels could be a good enough zone where you may look to start buying. Just keep maybe one more tranche of buying possible if in case the stock falls down to 1100 mark.
All right, the next one is coming from Balaji from Andhra Pradesh. Do you have any view on Hatsun Agro by any chance, Ashish? Because he's saying that he's seen an increase in the retail stores and availability and sales in the state of Andhra Pradesh. So he wants to know, is this a good buy given the fact that he's seeing physical presence increase for Hatsun Agro?
Well, I think it's a very, very great story. I mean, if you have no time constraint and you can hold on, it's a very strong fundamental counter, and it has a long way to go. So if you're looking at some idea which can over the years multiply your wealth, then Hatsun Agro is one of them. So clearly, and the visibility also, he's rightly pointing out, is increasing. I think with keep at least 3 years in mind and buy Hatsun Agro, it could do wonders to your portfolio.
Right, so all in for Hatsun Agro. But the next query, Kunal, is from the oil and gas space. Jyoti Ghai is firstly congratulating you for your take on ONGC, which she asked for yesterday. But now she has purchased futures of BPCL at a price of 461 rupees. What will be the advice here?
Thank you so much for that. First of all, for BPCL futures, so I'm pretty much bullish on the the OMC pack. Now the only catch with BPCL when I look at the charts, because I've seen this chart very closely comparative with HPCL and IOC, it's been a tad underperformer, and I'm not sure whether it's the underperformance in this phase of the rally or whether it's an underperformance as a structural phase where the stock has been underperforming with HPCL and IOC largely. But there is this slight bit of underperformance. Since you bought it 461, I would suggest maybe keep 470 or 469 as a closing base stop loss for the trade. And if the stock actually breaks out, we could be looking at even 500 to 520 as a potential target for BPCL. So, but just keep that slight edge that maybe 469 could be kept as a trailing stop loss.
All right, with that, we'll slip into a quick break. We'll be back and we will continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now, and next query is from Indu Kunal. She wants a technical view on CAMS and Exide. She wants to know if they are good for a fresh positional trade.
Well, yeah, I think both of them are good. In fact, Exide, I'm very bullish on the stock on a medium-term time scale, and I'm assuming that you're looking at least 6 months plus kind of a time horizon. Very bullish on both of these stocks, rather bullish on both of these stocks, but extremely bullish on Exide, so you can consider buying.
All right. Ashish, the next query is from V. Ravi Chandran, and he wants a take on CIE Automation. What's the outlook for the next 3 years, and can he go ahead and invest in this stock at current market price?
Yes, I think he can do that, and the outlook looks very promising. The company has been doing very well, and I think, yes, a reasonably good level to enter also.
So let's go for Imran Alam for you, Kunal. He wants to know about Borosil Renewables. He has 50 shares at a price of 431. He wants to know if it's the right time to book profits, or should he actually keep holding the stock?
I think you should definitely look to hold on to the stock, because the volume trigger with the stock has shown in the last 3-4 weeks indicates that there could be a bigger trend in the making. Yes, it's been a bit more volatile because of the overall market conditions, but I think on a broader basis, we should be looking at a much higher target for the stock in the medium to long term. So it depends on your time frame. If it's 6 months plus, then I think you should be looking at a much higher target than the current market price.
All right, one more query for you, Kunal, and this one is coming from Jaya from Bangalore. And on the long-term time frame, how are the charts looking for Precision Camshaft as well as Reflex Industries? I'm not sure whether you track these counters or not, but anything on the chart you could suggest her.
So Reflex I don't track, I'll skip that. But Precision Camshaft is something which is come back towards a major support point. In fact, the last 5-6 months, the stock has taken support at 225 to 225 to 230 odd levels as a support. Currently, it's at 246 approximately. So my sense is that it should probably try and retest the previous supports for itself. So maybe at 220, 225, you can consider buying the stock. If you're looking to, if you're already holding, then I think you can consider even adding at those levels. And on the upside, you can keep a modest target of 280 for Precision Camshaft.
Okay, Anubhav from Bangalore wants to know about Venus Pipes, 50 shares at a price of 1,355 rupees per share. He wants a long-term view on it, and also what levels can he look to average, Ashish?
Sorry, which stock are we talking about?
Venus Pipes. Venus Pipes. Venus.
Okay, yeah. Oh, okay. See, these most of the pipe companies are doing very well and a secular kind of a growth trend. Not the best of my picks in the pipe space. I would prefer an Astral or a Prince, but if he is already bought in, he can stay invested and look on the downside. He can maybe buy more in a staggered way.
Kunal, the next query is from Pratiksha and she wants to take on two counters. Firstly is India Cements, where she is holding these shares from a price of 267 rupees, and she also has Bayer India from a price of 4,550 rupees. Any support or the resistance levels that you can track for these names, and can she continue holding it for the next 3 months?
So the first stock which you mentioned was?
India Cements.
India Cement. So, India Cement has apparently been a huge underperformer because we did this price comparison study for the cement pack, and UltraTech Cement, of course, ranked to be one of the best ones. But from the mid-cap end, India Cement is still not broken past about the previous 2008-10 highs. I think if I'm not wrong, it's around 320-25 for India Cement. And even this last 6-8 months of the market rally and the cement sector rally, the stock has been unable to surpass those all-time high levels. So which means that there's some overhang for the stock, and that's why it's been underperforming. If you're asking for a support, then I think maybe closer to 200, 220 has been a historically good support for India Cement. Closer to that level is where you can look to buy. Bayer Corp I don't track, so I'll skip that.
Okay, Kunal, another one coming your way. PNB Housing Finance bought at an average price of 1,060 rupees per share. This is coming from Nishi. She's holding this counter for the long time. She wants to know what should she do with this counter, because she believes that last time you had advised her to continue to hold on to PNB Housing Finance. Also, she has persistent 3,100. Should she book profit or hold?
So I am very bullish on PNB Housing Finance, and my sense is that the stock has shown excellent chart patterns across the monthly time scale. Now, of course, you'll have to be patient for the entire trend to play out. In the last 5-6 months, if I'm not wrong, the stock has moved from 400, 450 levels to 800, 880 mark where it's trading right now. So which means that slowly and gradually the stock would continue to move up higher. So you need to have a slight higher term time frame. And if that's the case, then you could be looking at even a 1,200 to 1,400 as a potential target range for PNB Housing. I'm very bullish on the stock. Persistent, on the other hand, as I mentioned earlier, that maybe the mid-cap IT stocks could start to underperform a bit. So at current levels, you may look to book profits, but if you're looking to buy, use corrections, significant correction to buy.
All right. The next query is from Vikram Ashish, and he wants to know that is this a good time to add Maruti Suzuki as well as Vedant Fashion at current market price for a long term?
Maruti, yes, I think auto sector is doing very well, and I think relatively in the auto space, Maruti has done less than some of the other majors like Tata Motors, Mahindra. And the company is also expanding in a very, very big way. There's a huge new capacity coming up in near Sonipat and also in other places. So I think the outlook is very encouraging, and Maruti certainly I'm bullish, and I think you can go ahead and buy in a staggered way. The other stock was, I didn't get that.
Vedant Fashion.
This one I don't track. Vedant Fashions I don't track, so I won't like to comment.
All right.
All right, Kunal, coming to you. This one is coming from Sukumar, who's writing to us from Chennai. He has Bandhan Bank, 900 shares at a price of 245 rupees per share. He wants to know whether he should hold or look to exit Bandhan Bank right now.
See, hold on to the stock, but I'm not too much optimistic on the near-term prospects because of the way the stock has been extremely volatile. See, on the upside, 265 approximately is a major breakout zone. The stock has failed to cross over this breakout in this last 3-4 weeks back of attempt towards a retest of the trend line. But on the downside, I think 215 approximately is the support for Bandhan Bank. So 210, 212 to be precise is the support for the stock. So you can keep 210 as a stop loss and continue to hold on.
Right. The next query, Kunal, once again coming to you. This one is from Neelam from Jaipur, and she's sitting at a 66% profit in Oracle Finance, one of the star performers for today, and she's having 53% profit in Tata Power. Good time to book out profits, or maybe in the next 3 to 6 months there is more potential?
See, I think what you have to also remember that when you're looking at such kind of profits, and if you have a longer term time horizon, you have to ensure that you probably carry on the positions from a long term play. It depends now on your time frame, because if you're looking at it from a short term play and if you're happy with 50%, 66% kind of a profit on these stocks, then I believe that could be a good zone where you may look to buy, book profits. But then if you're looking at holding on to these stocks for another maybe 3, 4, 5 years, then I strongly believe that Tata Power as well as OFSS, they could probably catapult to much higher levels than what they are right now over the next 3 to 4 years. So it all depends on your time frame and whether you have that holding power or not.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. More on the other side. Don't go anywhere.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries. And Ashish, coming to you for the next query. This one is from Shivakumar from Bangalore, and he wants to know at this point, can he enter JSW Infra or Jio Financial Services for a long-term investment?
Jio Financial Services definitely, but long-term would mean genuine long-term, maybe at least 3 years. JSW Infra also, I think you can do. I mean, although the part of the movement is already done, but JSW Infra also is looking good. But Jio Financial could be very good if you are actually a genuine long-term 3-year plus kind of a horizon investor. Then Jio Financial is a great stock to accumulate and keep.
Let's kickstart with the rapid fire. First one coming from Kamal from Pune. Kunal wants to know JSPL as well as Jindal Steel. Good buy right now at the for the long term?
Yeah, Jindal Steel is a good buy at current levels.
All right. Kunal Sunny is holding 100 shares of ICICI Bank at a price of ₹1,000. Should he wait in this one? What's the technical level to track?
Hold on to the stock as of now.
This one is coming from Anusha from Mysore. IGL, a good buy for the long term, Ashish?
No, I don't think so. I think they're better off with it.
Okay, Kunal Suresh is holding TCS from a price of ₹3,480. Wholesale or buy more?
Definitely hold on, and if possible look to add also.
All right, this one is coming in from Rita from Kolkata, who's already bought 100 shares of Electra Greentech at 1425, JBM and Gensol as well. Makes sense to hold on to these counters for the long term with the EV play in mind, Ashish?
Yeah, certainly. I think hold on to all of them.
Ashish, what's your take on Bank of Maharashtra? Sonia wants to know, can he go ahead and invest afresh in this one?
Yes, as long as he has a decent risk-taking capacity.
All right, Venkat Ramani, Kunal wants to know that should he buy PNC Infra as well as Jupiter Wagons currently for a period of 1 year?
Yeah, I think both of them are attractive. You can consider buying.
Okay, Kunal, Rashesh is holding 200 shares of Tata Motors, but his buying price is ₹637. Is that a hold or sell?
Hold.
All right, Dhawan from Bangalore has bought CCD 2,000 shares at a price of ₹42 per share. Does it make sense to stay put with this one, Ashish?
I don't think so. I think there's still a lot of loose ends. There are better opportunities available.
Okay, Ashish Murli is holding Bharat Rasayan and his buying price is ₹12,310. He's sitting at a loss. Any view on this one?
I think continue to hold on. You should get your purchase price back.
All right, IEX Kunal 191 at a price of 150 odd rupees. Should our viewer look to average, hold or sell?
I think you should look to average at lower levels.
Okay, Ashish, what's your take on Share India? Krish wants to know, can he go ahead and enter this counter for a 3 years investment horizon?
Yes, he can.
All right, with that, we come to the end of the rapid fire as well as queries. Thank you so much, Ashish as well as Kunal, for patiently answering questions on the query front, talking about Nifty Bank as well as IT. And with that, viewers, we are totally out of time in this edition of Buy Now, Sell Now. Goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at noon coming up next, and we'll take more queries tomorrow.